Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD came under pressure since Friday following the softer than expected US CPI report and then the US-China preliminary deal over the weekend. Overall, the market pricing didn't change much as it was already very dovish going into the CPI and the trade talks. But given the positive risk sentiment, the greenback continues to stay on the back foot. The risk-on sentiment is expected to weigh on the dollar in the short term, although Treasury yields could also raise the drop triggered by Trump's escalation a couple of weeks ago. This could create some tension between bullish and bearish drivers, but for now there is no strong reason for the dollar to rally amid the lack of key US data. The Fed tomorrow is widely expected to cut by 25 bps and keep the status quo given the lack of US data. For this reason, the decision is likely to be a non-event, considering that we won't even get the SCP. On the JPY side, the currency has been weakening since Takaichi became prime minister, as traders continue to expect the BoJ to delay rate hikes. The latest Japanese CPI didn't help much either, as the data came in line with expectations and in the BoJ's projected range. Today we saw some yen strength on the back of positive US-Japan talks and some hawkish comments from US Treasury Secretary Bessent on Japanese monetary policy. Right now, the market is pricing just an 18% probability of a hike at the upcoming meeting and 42% for a hike by year-end. It's worth to keep an eye on leaks ahead of the decision and especially be prepared for a surprise hike, even though it's unlikely. Now the daily chart. We can see that the USD-JPY pair eventually rejecting the resistance around the 153 handle, where we have the confluence of the recent high and this top trend line. That's where the seller stepped in with a defined risk above the trend line to position for a pullback into the 151 support. If the price falls into the support, we can expect the buyers to pile in there with a defined risk below the support to position for a rally into the 154.80 level next. On the 4-hour chart, we can see more clearly the rejection around the 153.26 level, where we have the top trend line and the recent high. There's not much else we can add here, as the buyers should wait for a pullback into the 151 support, while the buyers will want to see the price breaking lower to increase the bearish bets into the 148.50 level next. On the 1-hour chart, we can see that we have this minor resistance zone around the 152.50 level. If the price gets there, we can expect the sellers to step in with a defined risk above the resistance to position for a drop into the 151 support. The buyers, on the other hand, will look for a break higher to pile in for a rally and target a break above this top trend line. These red lines define the average daily range for today. For the upcoming catalysts, tomorrow we have the FOMC policy decision, on Thursday we have the BoJ policy decision and the Trump-Xi meeting, and on Friday we conclude the week with the Tokyo CPI.